Hi everyone, welcome to WYC channel. My name is Rifad. This week's video is about the kind of another video about the chaos what's happening and like the crazy correction that we're having, and kind of trying to give my point of view in terms of what's going on, how to kind of absorb all the news and all the crazy things, and trying to filter out, I would say, the panic in this, and kind of hopefully I can maybe guide you guys and maybe have a better point of view in terms of how you guys should take an action in this kind of correction and cause with the whole virus and everything, and what to expect, I would say. So before I kind of share you guys the the basic PE ratio about the major indexes, I just want to kind of go through as saying, I honestly feel like the stock market is not done kind of getting corrected. I would say we have more chaos to see come in the near future. You guys are gonna say, hey, that's Captain Obvious. I'm expecting that, and but yeah, I would say that, and but I know I'm repeating, but yeah, and I would say don't worry too much about what's saying, because when I'm going to show you guys the PE ratio, you will see the correction that we had. People are just blowing it out of I mean, the correction we had is not as great as it was a long time ago. I would say, just even if you see the charts, roughly I will show you guys, and you guys will understand and understand like, okay, this is not as bad what people making. Just like make headlines, right? I make panic and panic sell to kind of cause a correction. That's the ultimate goal, to have a bigger correction, have a bigger recession, to kind of those kind of stuff, to kind of have a snowball effect. That's kind of what I see and what I think. So let me jump. I'll show you guys quickly the PE ratio. So you guys can see here my screen. You guys, this is I took two links just to make sure I'm not lying, at the Barron's and the Wall Street Journal. Kind of what they do is finishing today in terms of like saying, what's the PE ratio and what does it compare to a year ago, we'll say, right? You can just say, take the S&P 500, which is the standard everybody sees, right? Like compared to like last year, it was at 20 this time, and it's 23. So technically, it's, even with all the correction we had, it's still expensive. The S&P 500, it's still expensive compared to even last year. So I understand that, but it's still expensive. So that's one. And the estimated, we'll say the estimate next year is 17, which is reasonable if they hit all their targets, which I heavily doubt right now they're gonna hit all their targets, because with all this kind of virus and the economy slowing down, this is gonna be way up. I would say even close to like 20. Like, this is estimated on estimates that when the economy was running and predictable, I would say, but none of that is taken into account. So one that comes into the picture is gonna rise it up a bit, because the earnings are gonna hell drop. So it's going to be very interesting to see over there too. So as you can see, it's not that expensive. It's like the correction happened, but wasn't as big as people think it is. Same goes to Dow Industrial, right? Industrial is still expensive than last year. But the forward, it's higher. It's 16. Everyone's like, oh yeah, but next year's earning, it's cheaper than next year's earning, which is 15, the average. But yes, but if they are able to hit their targets, which I heavily doubt that the companies right now are able to hit those targets and the numbers that they set, it's going to be a huge different ballpark when we start hearing quarterly earnings, when they're going to come out pretty soon, right? We had in January, so it's like February, March, April-ish. April is the second season of earnings. That's going to be interesting to see what happens there. And then we can have a better idea as how it's impacting them and how it's going to impact the earnings and the results the year moving forward. So that also, I would say, it is. So that's that. And I just took we guys had the VBAL, the Balanced Vanguard ETF that kind of buys pretty much the whole, a bit of other ETFs. So it's a very balanced one. And if you guys kind of see the average, right, we'll see we had a correction back in 2018. I guess remember during Christmas period, that time the correction was like around 10%, went from its highs of 25 to 23. That was like over 10%. And same goes to here, like now it went from 27 to 20, now we're moving close here, 20, 23, 24-ish it ended. That's around, like, I think, if I'm not wrong, like around 12% down period. But I mean, it's comparable to what happened then, you see. And but then it was just triggered as per just a random correction would just happen, and people were talking sell-off was happening. But this is a real factual thing that can really impact, and it's just almost comparable to what happened back in 2018. Same goes to WeGrow, which is a same concept as VBAL, that invests in index. That also went from its high and lows of 2018. It's roughly around same thing. It's around, I think, around 10% drop, and over here it's around right now maybe around like 15% drop. But roughly, when you see all of this kind of concept, I think the market is still, like, it's going down, yes, but it's not finished. So what kind of advice I would give pretty much to everyone, just coming back to recap, to changing scenes, our recap is just be careful. Just don't get caught into this kind of buying opportunity. Even me on my end, yes, I am buying, but I'm cautiously, and like I would say, I am more into fact, like I'm picking the amount, the time I'm buying. I would say that kind of the approach I'm doing, and I think I would recommend for people to just don't jump in because when you see a drop, oh, now is the time, let's jump in, let's buy, let's funnel in the money. Because I think there are still a lot of fog, and we don't know what's in front and what's the earnings going to represent, how much it impacted the business. We have no idea until the earnings seasons comes out and we get to talk to the management and shareholders get to ask their questions. So when that moment comes, I think we have a better, more clarity. You can either hedge your position saying, oh, everything's going to be fine and everything's going to be good, and boom, it's going to go up, and then you get a jackpot, I would say. But that also, it's calling speculation, right? But when it comes remaining to factual means, I think it's better to be cautious and just jump in and pick some shares of companies that I'm picking up but I'm very, very picky in the amount jump in and pick those shares, because I think there's a lot of things going. Even some of my shares overall, yes, it got hit, but not that much. So I would just say, that's my recommendation I would give to people. I would just say it's an opportunity to buy. If you've never bought a stock or shares like that, I would think now is the time to jump in and maybe pick some up, because I think this is a good opportunity to kind of get your toes into the water. But if you already have it in, I would just say cautiously optimist, get some shares if you think it's the right price. If not, wait, because I think there's going to be way more buying opportunities coming up in the near future, and don't spend it all, that I would say. And don't worry about all this. I think this virus is going to pass out. And I think once it passes out, it'll be amazing. You can grab some shares at amazing prices at a discounted rate, which is going to be great. And also another thing is, on a closing topic, I always kind of tend to stay away to commodities, and this is one of the main reasons. Biggest impact on the TSX was because the TSX is very heavily exposed to commodities, oil and stuff like that, has been the major player and a major hit. So I would just say stay away from commodities like oil and like all this kind of stuff, because it could be dangerous. You would say in terms of play can happen, because with the oil price fluctuating and stuff like that, it could have a major impact in terms of your portfolio. So we never know how they can turn out with all this kind of stuff. So yeah, so I kind of resumed the whole thing. I hope I helped you guys kind of have a better idea, maybe to weather the whole storm and to kind of position yourself in a better winning position come maybe summertime. Hopefully this whole thing can pass off and you can come out great. So that's kind of my goal. I hope kind of give you advice. Anyways, if you guys think any ideas or stuff like how you guys are kind of planning to kind of go through this storm, drop it down, comment down below. Would love to hear from you guys. So like always, so if you're new to this channel and like this video, hit the like video. Not even new, I mean new, subscribe, but like also, and also people that are always viewing my channel videos, like it. That's awesome. So thank you very much for watching and have yourself a wonderful day. Whoosh.